All right, while everybody is panicking, I want to show you something hugely significant to these charts to dive a little bit deeper into exactly what's been going on right here. You guys have really been enjoying this content. Thank you all so much for smashing up those likes and subscribing to the YouTube channel. So I want to break this down for you right here. Now, this is the big dump that we obviously saw, most of it just happening yesterday. And over the past 24 hours or so, we've pretty much actually been trending higher. Now, for a brief moment, we dipped a little bit lower down to the very bottom of my support range, which was super impressive considering how accurate it was. But since that low, Bitcoin has managed to rally up by nearly 10%. That's not a very strong bounce, unfortunately. I want to compare this to the kind of bounces we had before. And then in a moment, I'm going to talk to you about how high we could be going. I want to show you one chart, which is going to get you very excited, just to show you what could be at play. Most likely, it's not something that I want to pay attention to, though. And I just want to focus more on the short-term stuff for today, including, where the rest of the market is. So just before I get to that, let's take a look at some of the other bounces Bitcoin has been able to enjoy from this level, this yellow box right here. And, just taking a look at these bounces again, I said this in yesterday's live stream, so if you're not already subscribed, you would have missed that. But one of the key things here is, these bounces ended up happening pretty quickly, right? You can see that within a matter of, in this case, 4 hours, we would pretty much, completely recover back up. On this occasion, for example, this 1 4-hour candle managed to trade up by 8%, but, basically within the next day following, the crash, it had managed to move up 24%, and if we look at, if we look even closer on the 1 hour time frame, for example, and we just, we take a look at how long it's been since we, hit the low. I think this is going to put some things into perspective for us, right? That it's now been 19 hours. We've moved up by about 10%. If we take a look at this zoomed out and we go to, some of the bounces that we saw during summer of last year, when we were kind of, more or less about 20 hours, deep into the market movement. You can take a look at what happened before. This was a 19% rally, so it's double what we did just now. On this occasion right here, moving a day forward, it was actually more or less the same. So on this occasion it wasn't too bad, but I think broadly speaking, what we can see is this dump has this recovery so far has been on the weaker side. It's not been too crazy, but especially, one of the key things to keep in mind is when it's the first time that we're hitting the support area after a while, generally you expect the strongest reactions, right? So if you're, and you can see this very clearly, again, we were talking about this on the live stream, these first bounces, they were very quick, but you can see how, afterwards it gets a little bit slower. You can see how the market kind of stays down for a little bit and then moves up, and it gets even more obvious right here. Look at how much time we're actually spending inside of the yellow box. We can actually measure this, pretty easily. On this occasion, it's very straightforward. We spent 1 hour. On this occasion, we spent 20 hours. On this occasion, again, about 20 hours, but the next time it's a lot longer. The next time it's a day and 20 hours. So what is that, like 44 hours? And then the next time it's way longer. This we're basically in the box for a month. The next time after that, and so you can see how it takes longer each time to recover up. And it's the same previously. It's the same when we first hit this range for the first time ever as support. You can see pretty clearly. This bounce happened fairly quickly. This next bounce happened fairly quickly still, but the bounce after that, it actually took a while. Again, we can, this one's a little bit harder to measure, but from this top to when we broke out, took about 3 days. On the next occasion took about 2 days, but on this occasion it took 13. So generally when we first hit a support area for the first time in a while, we are going to expect to see stronger bounces. And so seeing that this is kind of towards the lower end of the reactions we've had, in my opinion, is not great. And so one of the things that this has actually drawn my attention over to is the fact that, we could be trading in some sort of a parallel channel that looks a little bit like this. And the whole idea here is that we are, kind of moving down and then slowly trending upwards, which is going to create that classic staircase pattern that you will have heard me talking about a lot on this YouTube channel if you've been subscribed for a while, because this is exactly what tends to kind of like dominate the markets, in my opinion. In my experience, is that we do kind of form these patterns where yeah, the market just kind of slowly climbs higher, fighting the existing trend. And the catch is that it does that until it meets resistance, and with my EMA ribbons, which I love to use to give me an indication of where resistance might be, we're in the 1 hour EMA ribbon right now. We're battling that resistance as we speak. And you can see if I remove the ribbon, we've already had, a small handful of, rejections. We're potentially in one right now. I don't think it's going to be the biggest problem in the world, but the problem is that, if we zoom out even further onto the 4 hour time frame, for example, then, there's still a lot of resistance, and it's pretty close. I mean, this yellow line right here representing the 21 moving out EMA on the 4 hour time frame, this is already down at $33,000, and we're only at 31.5. So the market literally needs to move up by like 4.5-5%. And it's going to meet this resistance. And if you don't know what this indicator is or how to use it, then just pause the video now, type this into the YouTube search bar, and you can watch my free tutorial on the EMA ribbon. This is part of my 𝗪𝗪𝗥𝗙𝗦 Academy courses. I've got two 𝗪𝗪𝗥𝗙𝗦 Academy courses. There's the regular one, the advanced one, and this video is part of both of them. And so if you want to get a kind of free taster of what we're offering, then you can do that. But VIP, and of course by extension the courses, because most of you guys joining VIP get the courses for free depending on which plan you take. VIP is 25% off right now during all of this carnage. And by the way, we price it in Bitcoin, and so now that Bitcoin is also low, you're getting a huge compounded discount on VIP. So if you want to jump inside, be able to take advantage of that discount, then the steps are on screen right here. I told you guys that I'm entering a position yesterday. I said that on yesterday's live stream, because obviously we are trading these markets right now, and I'm in a profit on that position. It's not a huge profit, but it is a profit, and I'm happy with it so far. I'm not going to talk too much about it, because right now that is an ongoing trade inside of VIP, but I've already managed to secure a little bit of profit, and I've raised my stop loss. I've cut my risk in half within 12 hours, which I'm super, super happy about. This is, quite real clinical trading. It's not like taking fucking lines of cocaine or something. This is, quite sustainable, healthy trading, in my opinion, at least. And so if you want to see how that looks in these markets, to be able to, kind of consistently dominate these markets over the months, over the years, then, this is what we've been doing. And the way you can jump inside is by clicking on the first link in the description down below, then on the @4flies button, and then send message to ask me how to join and get yourself inside there, at least get the information. So yeah, quite a bit of resistance that we could be meeting up ahead. On the 4 hour time frame, it's still quite far away, but on the 1 hour, it's not. On the 1 hour, this rising wedge is going to take us right into this area, literally within the next day or two. I mean, literally not too long at all. And that could, I think, definitely apply a little bit of pressure on the market, just given that, again, I'm not seeing the biggest signs of strength. This is something that I was mentioning yesterday, is I just need to see how the market reacts to this stuff. And yeah, unfortunately, I mean, at least we didn't keep on dumping, but it is still somewhat concerning. Now, one of the things, or two of the things that I think are actually going pretty well for the market is, first of all, we're seeing a big change in the longs and shorts. I mean, if we take a look at the long and short ratio right here, specifically, just want to focus your attention on Binance, because it is the biggest exchange in the world. It's at 50%, still favoring longs. Hard to believe, but people are still super bullish on leverage exchanges. On the shorter time frames, it's actually massively favoring I'm sorry, I meant to say it's favoring the bears earlier. When you have more longs than shorts, that is an indication that people are very bullish, and so this is an indication that shorter term people have now become much more bearish, but the split is still pretty even. And the thing is that this number used to be closer to like 55% or something, a little bit. I mean, just days ago, really. I mean, I don't know if we can actually see the history of how this has changed. No, we can't, because it doesn't show you just Binance. Obviously, Binance, like I said, is the one that I want to focus on. Let's pull that up and take. Oh, I need an account, so I'm not going to do that. The other thing, though, that shows me something similar is the BitMEX funding rate. So take a look at this. The BitMEX funding rates are also very, very low, massively favoring the bulls. I just want to point this out to you so we can put this into a little bit of perspective. Let's just take a clean chart, because this is all getting a little bit too confusing now. And I'm going to move this up so we can see this clearer. These funding rates are obviously negative right now. The lower it is, the more it means people are trading shorts. And so this basically means that it's somewhat complicated. I don't want to waste your time with it because you don't actually need to know what it means. But beyond just the fact that this is a representation of when it's negative, it means a lot of people are going short. More people are going short than people who are going long. And this has spiked now. So if you take a look at the last time we kind of hit this area, it was at the very bottom. Right here, when Bitcoin fell down to about $33,000 on its first big rip, and then before it rallied back up to like 47, it was like that over there. And on our little flash crash, which we were actually predicting on this YouTube channel, we got this perfectly nailed down at $42,000, and so that was another fairly key reversal point in the market, because obviously the market managed to go from about $42,000 up to about 52. So that was quite a correction that we were able to see just with the funding rates being so far negative. Again, the reason I'm showing you this stuff is that we've definitely got the signs now that things are finally starting to shift and favor the bulls from other directions, that we just didn't have before. Before there just was so much bullish energy, but obviously now markets are most bullish when they're at the bottom, right? I mean that's a fairly obvious thing to say. If I say it and pause and let you think about it, you'll get it, right? Markets are most bullish at bottoms. They feel most bearish, but naturally, because it's a bottom, the only way you can go is up. And so funding rates are a great display of that. Just looking at long and short ratios, seeing that they are changing and they are now much closer to being neutral is also a good sign. It doesn't necessarily mean we're there yet, but it is a good sign. And again, just seeing that we are in a bounce right now, I mean, look, the thing that I just want you guys to know is, to me, this is, a chance for Bitcoin to do something good. It doesn't mean it's going to take that chance. Bitcoin has failed so many chances before already. So realistically, it probably won't. But the thing is, and this fact remains unchanged. I've been holding on to it for a while. In fact, I was saying this since, we were even like up here, is as long as we don't lose 30K, we're still in a pretty good place because this support level is strong. This is a good support level. It doesn't mean we're not going to lose it. We absolutely might. It looks very probable right now, but we are still holding the support, and I don't want to make crazy conclusions until and unless that changes. I think that a lot of people will kind of rush into conclusions that they perhaps don't need to, purely because they're just worried that the market has already dropped by, in this case, like 30-40% or whatever. And obviously that's just a horrible strategy, which, just isn't really going to work out in the long run. The other things that I want to show you actually consist of, just painting where we are in terms of, support resistance levels and so on. So what I want to do for this is actually just take a box and just kind of show you a few key levels that I'm watching. The first one, and this is the most important one, is, going to be kind of between $37,000 and $39,000. The second one is not so relevant, but it's still worth talking about, is this kind of area right here. And the third one is more or less where we are right now, this being the kind of bottom of our support band right here. So take a look at this. This, I think, is a potentially quite good display of where some of these key levels in the market are. And of course, just seeing that we have now gotten this bounce. I mean, again, I don't know, we could end up dipping down, but again, the way support generally works is that you don't. And the thing is that there's quite a gap here. There's quite a large gap here for Bitcoin to move up, and not a lot of resistance on this particular chart. Now, obviously, if we start throwing on, the Ichimoku cloud and the 4-hour, EMA ribbon and all sorts, like that, then yeah, there's a lot of resistance right in the middle. Like this EMA ribbon is right in the center of all of that. The Ichimoku cloud, again, is right in the center of all of that. So it's definitely not smooth sailing, but as far as just this very raw horizontal support resistance analysis goes, which in my opinion is the most reliable form of analysis you can carry out. I mean, just in my experience, of trading and analyzing for 5 years, which in crypto years it's like dog years. I mean, it's like 20 years in human years. To me, these horizontal levels are what I like to, put a little bit more attention into. And again, one of the key reasons I'm just putting so much attention towards this is because other people aren't. Other people are very, very fearful right now. A lot of people panic selling and so on. And, to me, I just, I don't like to get carried away, swept away in these kind of things when you're literally, losing a quarter of your value within 5 days and you drop down to an absolutely critical support level, which has held so many times before, and you've got all the classic signs of the market moving up. I mean, I was saying it yesterday, and it's already happened. I just think that there should be a little bit more room to rise up, and even if we don't, I am still expecting a little bit of consolidation. And so the next thing that I want to do is see how this consolidation moves along. Do we show a particular pattern with our consolidation? Do we kind of move up, bull flag a little bit, and then move up again? Because that would be super bullish, if we manage to do something like that. Or do we kind of form a rising wedge, but each time we move down, do we start seeing a volume spike down here? These are the kind of signs that I want to start reading into, and I don't quite have enough data for that yet. But so far we have been seeing pretty decent volume. I mean, this volume data changes depending on which exchange you're on, by the way, because the red volume was actually bigger on other exchanges. But we are seeing some nice spikes. So I want to continue to see how these spikes can, go on. I mean, do we see more red spikes every time the market, finds, if we are indeed going to be trading in, something a little bit like this, every time we hit the resistance area, how bad is it? These are questions that I need answers to. And I just need to kind of wait to see how the market moves, and depending on that, I should be able to read between the lines a little bit more in order to show me is the market going to keep pushing down? Because the thing is this is a very, very strong support area, so we're going to need a lot of bearish momentum to take us lower. One of the ways we can regain that is by pausing or by slowly moving upwards, because by slowly moving upwards, you're essentially giving the bulls a chance. And if they don't seize that chance, well, then the bears take it, and they keep dropping the market lower, So that's the kind of thing that I'm just watching for right now before making my next move right there. There's so much going on in the altcoin market. I'm planning out at least 2 more positions that I'm going to be sharing inside of VIP. As usual, I'm trading all of these things only on Bybit, so check them out with the link in the description down below. When you sign up using my link in the description, you're going to get some extra cash deposited into your account for free after you sign up and make your first deposit. And you can trade with that money. You can do whatever the hell you like with it, and obviously you get to keep the profits on that as well. Depending on where you are in the world, you are going to need a VPN, but you already know the deal. I can't recommend that. I'm doing it myself, of course, but I can't tell you to do that. But yeah, Bybit is the spot. It's got absolutely everything available to trade. It's pretty crazy, all the derivatives your heart could ever want as well. So yeah, it is the place that I'm going to be trading. And some of the things that I'm looking at right now are Solana. Solana looks like it's in a very interesting place. I'm not going to talk about it because I'm going to be covering that inside of VIP. There's also Phantom, of course, which is very interesting to be watching right now. Cardano is something that I want to trade very, very much. And Ethereum's actually holding up pretty well. Look at Ethereum rallying up against Bitcoin. I mean, obviously against the dollar, it's also dropped by quite a bit, but against Bitcoin, it is gaining a little bit of strength, which is interesting. All of this is happening while the dollar is still more or less at its highs, and so the dollar very well could continue to rally higher and just fuck the whole market again. And I'm not ruling that out, but for now, that hasn't happened, and I do want to stay somewhat optimistic about that. So there you go. That's what I'm seeing in these markets today. If you have enjoyed this video, you know what to do. Hit up the likes, subscribe, tick the bell, and I'll see you all in the next one. If you want to jump inside of VIP, once again, these are the steps with 25% off. You're getting some crazy packages right now at some of the best prices we've ever offered. So check it all out with these steps on screen right here. And yeah, I'll see you all in the next one. Bye-bye.